Out of 1,600 people who tried day trading, buying and selling on the same day, only 3 made more than minimum wage. The app made getting in feel easier than ordering coffee. The hard part hits at 10:14 a.m. Your screen turns red. Your note says exit. And your thumb just hovers. Trading psychology is that gap. It's the space between the rule you wrote calmly and the choice you make scared. So why do your own rules feel hardest exactly when you need them most? So why does a rule that felt obvious at 9:25 feel optional at 10:14? You already know this from regular life. You leave home telling yourself, I'm only grabbing toothpaste. Then, you walk into Target after a long shift, hungry, a little annoyed. 20 minutes later, there's a candle, a charger, and frozen pizza in your basket. The list did not fail. Your state changed. Tired, stressed, and rushed, your brain stops following the plan and starts negotiating with it. Trading works the same way. In a calm moment, you write, if price hits this line, I'm out. Then, your phone buzzes at 10:14 a.m. The chart dips, red numbers flash. Suddenly, your brain has a whole courtroom ready. Your thumb hovers over the exit button while cold coffee sits beside the keyboard. Give it one more minute. It's probably just noise. If you exit now, you lock in the loss. Notice what changed. Not the rule, the feeling. That's why rules are hardest when money is on the line. A smoke alarm gives you one job, get out. A red trade gives you a painful maybe. Maybe it bounces, maybe you're early, maybe the next candle. A single price bar on the chart saves you. Uncertainty gives emotion room to argue. The pain is immediate. Hope costs nothing in the moment, so it feels easier. What's interesting? You don't write trading rules because you're bad at making decisions. You write them because fast, emotional moments change the quality of your decisions. If that clicks, subscribe. You'll get 2 practical reframes like this each week. Your rule card is not there to predict the future. It's there to protect your future self. The calm version of you borrows a pen, so the scared version doesn't grab the wheel. And that raises the next question. If one sticky note has to cut through panic, what 3 things should be written on it before you risk $1? Your finger hovers over the button. The chart looks clean. It feels obvious. Then your stomach tightens. Because the second money gets involved, obvious stops being obvious. That's why your sticky note needs 3 boxes, not one big motivational quote. Before you take the trade, you answer 3 plain questions. First, where are you wrong? Not emotionally wrong, price wrong. Say your entry is $50. Maybe your line in the sand is $49. That line is your stop loss, a preset price where you automatically get out of a losing trade. Second, how much are you putting on? If that $1 gap is your risk, and you only want to risk $100, you can take 100 shares. Traders call that position sizing, how much money you put into any single trade. Third, is this actually your pattern, or are you just hoping? The pattern is clear. Can you say the reason out loud in one sentence? Traders call that your thesis, your specific reason for taking the trade. Now give the checklist a name. Named rules are easier to follow under stress. This is the 3-question rule. Where are you out? How much are you risking? And what's the reason? Can't answer all 3 in about 10 seconds? You pass. Not because the trade is evil. Unclear trades become emotional trades. Trades driven by fear, excitement, or ego, not a plan, the second they move against you. And once 2 people see the exact same chart, this tiny checklist sends one into panic and keeps the other calm. No, give it 1 more minute. That's the voice that wrecks the second screen. Same chart, same morning, same candle, hovering around $50. On the left, you have the sticky note from a minute ago. On the right, you have confidence, adrenaline, and a crumpled rule sheet. Both versions of you enter for the same reason. Price pushed above the morning high. Volume picked up. It looked clean. At 10:14 a.m., your phone buzzes. The next candle turns red. Calm you does something boring. You check the note. Where do I get out if I'm wrong? How much am I risking? Is this still my plan, or am I just hoping? Nothing has changed. So you follow the plan. Frantic you does something human. You stop looking at the chart and start negotiating with it. It dipped before. It's probably shaking people out. If I exit now, it'll bounce the second I'm gone. Notice what happened there. You didn't make a market decision. You made an ego decision. That's the split. Calm you already accepted the small loss before the trade started. Frantic you accepts nothing. So, the market teaches the lesson the expensive way. This is why following your own rules feels weirdly harder than finding the trade. Finding the chart uses pattern recognition. Following the rule uses self-control while money blinks red on a screen. Those are different skills. And here's the trap. The frantic version usually feels smarter in the moment. You have more arguments, more certainty, more reasons to wait. But those reasons appear after the trade goes against you. They're not analysis, they're self-defense. The calm version sounds almost dull. I said I'd exit here, so I exit here. That line saves accounts. Here's why it works. Once you're in a trade, your brain starts protecting your feelings, not your money. Rules interrupt that. They make the next click mechanical. No debate, no bargaining, just the job. So when two people take the exact same trade, the winner isn't always the person with the better chart read. A lot of times, it's the person who obeys the sentence they wrote before the candles started moving. And the wild part is how small the first rule break looks. It's just one tiny adjustment, one little extra dollar, one more minute. Then suddenly a planned $100 loss becomes $320. Here's the exact math. At 9:47 a.m., your phone buzzes twice. The candle that looked fine 30 seconds ago is now red. On your screen, the plan is simple. Entry at 50, stop loss at 49, target at 52. You took 100 shares. So the math is clean. If price drops from 50 to 49, you lose $100. If it climbs from 50 to 52, you make 200. That's a risk-reward ratio. How much you can lose versus how much you can make, of 1 to 2. That was the whole point. Small loss if you're wrong, bigger win if you're right. Now the trade moves against you. 49.70, then 49.40, then 49.10. Your stop is one tick away. You can almost feel the insult of it. You waited, you planned, and now you're about to lose the full 100. So you tell yourself a very normal lie. It's too tight. The market is just shaking people out. I'll give it a little room. That sounds harmless. It feels flexible. It feels smart. But watch what actually happened. The moment you drag that stop from 49 down to 46.80, you didn't save the trade. You changed the deal. Now you're risking $320 per share instead of 1. On 100 shares, that planned $100 loss just became $320. Same entry, same chart, same person. Only one thing changed. You broke your own first answer. That's why the yellow sticky note matters. Before the trade, you had 3 questions. What's my exit plan if it goes south? What size am I taking? Is this a real setup, or am I just hoping? A minute ago, you had all 3. The second you widened the stop, question 1 changed. Question 2 should have changed too. If your stop is now $320 away, 100 shares no longer fits the same risk. To keep the loss near $100, you'd need about 31 shares, not 100. But almost nobody does that in the heat of the moment. They keep the same size. They keep the hope. And now the loss is doing push-ups. This is how discipline breaks, not with some giant meltdown, with one tiny edit that feels reasonable. Here's the thing that hurts. The trade can still bounce later. It can even go back above 50. If that happens, your brain learns the worst lesson possible. Breaking rules worked. That's how bad habits get glued in. You stop trusting the sentence you wrote before the trade. You start trusting whatever emotion is loudest during the trade. That's emotional trading, making trades driven by fear, excitement, or ego, not a plan. Poker players know this feeling too. You set a limit, then the pot grows, then your ego whispers, stay in one more round. In trading, that whisper just has a cursor and a draggable line. So the real damage is not only the extra $220, it's the new belief you teach yourself every time pressure hits, which raises the ugly question. If the math is this obvious, why do smart people still break the rule the second feelings show up? The chart is not the hard part. The hard part, your calm self writes the rule, then your scared self gets a vote. That's why vague advice fails. Be disciplined is useless at 9:47 a.m. The number turns red. Your mouse is already dragging the exit lower. You need a rule small enough to survive stress. Call it the 3-question rule. If this is helping, subscribe. We do this twice a week. Before you enter a trade, answer 3 things. First, what exact price proves you're wrong? Not somewhere down there. One price. Second, how much money are you risking if that price hits? Not what you hope to make, what you can calmly lose. Third, can you explain the trade in 1 sentence? If your reason sounds like it feels due, that's not a plan. That's emotion wearing a tie. And here's the key insight. You don't follow rules because you're strong in the moment. You follow them because you decided earlier that the moment doesn't get a veto. So when feelings show up, don't debate them. Compare them against the card. 3 answers, 10 seconds. Miss one, and you pass. That sounds almost too simple, which raises the only question that matters next. How do you make this automatic before the next red number flashes? Next time the screen goes red, do one boring thing first. Read your card out loud. Your card is a checklist you write before trading. Exit plan, size, setup, or hope. If one answer is missing, you skip the trade. That's your homework. Tape it above your laptop for 1 week. See what changes. Want more plain English rules like this? Subscribe. The next video covers what to do after 3 losses in a row.